All right, good morning, everyone. Let's get going. Right. um, all right, last night's session in the U.S. was seriously exciting session. We obviously had major reversals in all the indices. I think dropping some real support levels, especially in the Nasdaq in the 4,000, and we just had a hard reversal in the last 3 hours, more or less finishing on the highs and most all the indexes. I think I think the action from yesterday was really telling. The previous day we also had a hard reversal to close out the day. To the upside, yesterday we get the same sort of thing, and I have a feeling that yesterday could have been the lows of at least the next week or so, just based on the action and the fact that the market just couldn't continue to sell into the end of the day 2 days in a row. We did have some of the blue chips like Coca-Cola and Johnson & Johnson that had really positive earnings. We also had Yahoo in the tech space after the bell that was up big on the back of their earnings. So really, all in all, good numbers also came out. We did have the Empire Manufacturing number, which was soft yesterday, and we actually had the CPI number as well that came out a touch hot. So. In terms of the actual economic data, not the greatest result, but nevertheless the market was able to totally turn the corner and rally into the end of the day, and rally hard. All right, Asian session, you can see there pretty much up across the board. I mean, not a huge day out of anything outside of the Nikkei. So, we haven't seen big follow through out of Asia on either direction in a while, and the correlations, to be quite honest, just haven't really been there like they used to be. But they did manage to eke out a little bit of a gain across the board. We did have some Chinese economic data over the overnight, which was the GDP number. We saw first quarter GDP came in at 7.4%. The expectations were for 7.3, but it's still the softest number that they've seen in forever in China. So a bit of maybe a relief there for on the back of some of the recent really poor data that's coming out of China. If we can move on here, we've just got a chart there showing credit growth in China, and what we're looking at there is the money supply numbers in the dark blue and the light blue. We're looking at overall credit growth, and in the gray we're looking at total social funding, which essentially is obviously the money that the government is lending out on social circumstances. So you can see there all of those numbers are really rolling over quite hard. And I know that obviously the GDP number came in a little bit better than expected. I don't know how much data you can actually believe that the government releases, but nevertheless, I mean, you can see by this chart, I think we're going to continue to see China under pressure in the near term, if nothing else. All right, the next thing we'll have a look at here, really interesting chart, is that Tuesday, turnaround Tuesday, is by far the most bullish day. If you look at all of the days combined, you can see there all the days outside of Tuesday in red. When you throw all the Tuesdays together, that's the number in blue. So we definitely have seen Tuesday being one of the most positive days on the index. So keep that in mind in your trading going forward. All right. On corporate action today, last night we also saw Intel. It's another one I forgot to mention. Sorry. Also came more or less in line with the expectations from the street, but definitely traded better on the back of that. We also have Billiton that came out with a quarter three review and a production update there. They talk about iron ore output up at 49.6. The expectation was for 48.3. So definitely a little bit of a beat there. We have a lot of earnings coming out in the States this afternoon, a little bit financial heavy with U.S. Bancorp, Bank of America, and American Express. We've also got IBM and Google. All right. In terms of the economic data out today, like we said, we had Chinese retail sales, also a bit of a beat. Industrial production was a touch soft, but the GDP number was better, better than expectations. We also had industrial production in Japan and capacity utilization there, which was a mixed bag. But later today we've got jobless claims in the UK. We've got CPI number for the Eurozone. We've got MBA mortgage apps in the States. Later, at 1 o'clock, we've also got retail sales here locally, year on year. Expectations for 3.8%. And then we've got housing starts, building permits, industrial production, and then Janet Yellen speaking to the Economic Club this afternoon. All right, let's get into the maps. Okay, same sort of thing we've been looking at the last few days. We're focusing a little bit on the indexes at the moment here because we're at such crucial levels. I think it's really important to focus on that at the moment, when you're kind of in the middle of ranges and, without any real significance in terms of the indexes. I think then it's definitely better to be more stock specific. At the moment, I think it's very pertinent to sit here and focus some time on the indexes. First thing we'll look at is the Aussie. And you can see here yesterday, really from where our breakout level was on the Aussie, we came back and tested that and basically closed right at it. You can see there this morning the little dot there where we opened up a little bit north of 43,500. That little green dot there, that's where we are at the moment. So obviously we're holding support for the time being. Well, we're going to mark support right now at 43,250. In terms of the Aussie, that level drops. I think we could see some more significant downside. We maybe at least see a pullback down toward trend support. At the very least, I would think that there could be a significant sell-off. And when you look at our index relative to any of the other indexes globally, I think, we must have held up better than anyone else. So just keep that in mind that we have outperformed, and that it's not necessarily going to continue. The next one we're going to look at is the Nasdaq. The Nasdaq had a major support level held last night at 4,000. Any way you slice it, this is a huge level. It fits every category. It bounced off 200-day, which is a touch below 4,000 here. It bounced off of the 4,000, which not only is lateral support here, but it's also the big round number theory. So the fact that we were able to hold 4,000 again on the Nasdaq is incredibly significant, and I think most likely we're probably going to follow this up with a couple days of bounces. This is 2 days in a row, 3 days in a row really we've attempted at this level, couldn't drop it. It's very reminiscent of the pullback that we saw at the very beginning of February. We had a big push down toward 4,000. The next day, we traded down to 4,000, bounced. The next day, we traded down through 4,000 convincingly for a portion of the day, managed to close above it, and then we really reversed higher. And that looks very similar to what we're seeing at the moment. So just keep that in mind. Very likely could be happening again. All right, excuse me. Next one we're going to look at here is copper in New York. Looking at the copper price here, definitely at 305, there's some sort of support level, support resistance level. Definitely a very clearly defined bear flag pattern that pushed up against this 305 level. And look, after we broke down here, we came back up. It's 1, 2, 3, 4, 5, 6. It's 10, 11 trading sessions in a row where we tested 305. We literally didn't close above it one day. And then finally yesterday we really broke down on the back of those money supply numbers in China. And we may find this hard to to recover again. I mean, this chart's definitely looking very definitive in my mind. You saw the resource sector across the board yesterday was getting hammered on those Chinese numbers, and we've had U.S. The precious metals took an extra smack, I think, simply because U.S. data has been so much better. So, we'll continue to follow that story going forward. But watch a copper. It could continue to weigh a little bit on our local miners. The next one we're going to look at here is Vodacom, which really dropped the breakout level here, which is around 134. And it's also really, dropped this uptrend, which also this trend supports, this incredibly steep uptrend that we've been in, going all the way back to the end of February. Bottom line is we've definitely dropped support. I know they came out yesterday, Vodacom and MTN basically giving up the fight against the interconnect rates being dropped, and they obviously getting much more worse affected than MTN or some of the others. So you saw Vodacom take the brunt of the selling there yesterday. We're going to watch this one over the next few sessions, see where this thing can maybe pull back to come into support. Long-term chart's still looking very bullish here, so I'm not necessarily looking to sell it at the moment. All right, Anglo Gold. Anglo Gold, I know we talked about this one a day or two ago, but this one's looking quite definitive in terms of it's starting to look more and more like a good head and shoulder setup. You can see there that the support level is coming in just below maybe 180. These ones that always tilted like this, always get a little bit frustrated kind of looking at where I'm wanting this thing to break down to. But I mean, you can see here, really the lows of beginning of April, down around 179, probably where I'd be looking for that thing to drop before you can really hop on the back of it. And I would expect a short-term test down here around support at 162. And so there's a lot of meat on that bone if we drop that level in Anglo Gold. And watch this one going forward. I think gold can continue to be under pressure. And continuing on that theme, we'll look at Harmony here, which is really, it's kind of had like a bit of a broadening formation here, and you can really see that we've kind of moved into a bit of a bear flag, I guess, that we dropped out of yesterday, and I think that this one also, same sort of thing. We can look to really drop the bottom out of this. This is probably the least preferred gold miner share. So as the market comes under pressure, as a gold price potentially comes under pressure, this is probably one of your better ones to sell. People very much dislike it. It's the least preferred in SA. So watch this one. If gold does come under pressure, I think we could continue to see this thing make a pullback toward the lows of the year. And that's it for today, guys. Thanks a lot. Oh man, my freaking throat was freaking going.